Alright guys, it's time to add another educational video to my free stock market education playlist for beginners where I teach you guys all about stocks. And if you want to check out past episodes, you can find the playlist up here, down in the description, or at the end of this video on a clickable card. But one of the videos that you guys really enjoyed was how to read a balance sheet. And as you guys know, the balance sheet is just one of the three primary financial statements of a company that is very important for any stock market investor who is researching a stock. And the other two statements are the cash flow statement and the income statement. And the income statement is very important because it tells you how much money is coming in, how it's kind of being spent on what expenses and things like that, and how much profit you're left over at the end. And so whenever I'm choosing a stock, I definitely always analyze very closely the income statement along with the other statements as well. So if you guys also want me to make a video on the cash flow statement, I'd be more than happy to do that. I can't speak today. Just let me know in the comment section or by hitting the like button, and that'll tell me that you guys want that video as well, because there are a lot of similarities between the cash flow statements and the income statement, but there's also a lot of differences as well. So I'd be more than happy to make that video too. But anyway, in today's video, we're gonna talk about the income statement, and we're gonna break it down step by step, category by category, and as we go through it, I'm gonna stop at each category and explain what each one means. And for this video, we're gonna be using the income statement of one of my biggest stocks, which happens to be Amazon. So it's gonna be a lot of fun. I hope you guys enjoy this. Let's get started. What's up everyone, my name is Ale and welcome back to my world of stocks. So we're going to use a website called nasdaq.com. It's one of my favorite websites to use. I'm not sponsored by them, but if you do want to use the website, I'll leave a link for you down in the description. But we're going to go there and then we're going to pull up Amazon's income statement and we'll go from there. Alright guys, let's kick things off by going to nasdaq.com. And by the way, most websites use very similar structures, so you can really use any website that you prefer. But once you're here on nasdaq.com, you're going to want to type into the search bar Amazon, and then you're going to click on that option, and then we're going to scroll down, and on the left hand side we're going to click on income statement. And from there we have three tabs available to us, which are the income statement, the balance sheet, and the cash flow statement. We previously looked at the balance sheet, so now we're going to focus on the income statement, and we're going to go line by line. By the way, you can use quarters to get more up-to-date information, but for now we'll just focus on the numbers for fiscal 2018. Okay, starting with the total revenue, this one is pretty obvious. It's just the total sales, or the overall money generated by the business in terms of their overall sales. And we can see here that Amazon generated over $232 billion in sales, basically their products and services that they sold, which is an extremely large number for a single year, and just kind of shows you how big Amazon is. And that leads us to the cost of revenue, and that's just how much it costs to make the product and distribute it or deliver the product and services to your customers. So that's things like manufacturing costs, and it can also include rent and even employee wages, but only if it's directly tied to the manufacturing and the distribution of the product or service. So maybe like the facility where you're producing everything and things like that. And so if you've ever watched the show Shark Tank, you'll notice that they always ask the guest how much does it cost them to make a product and how much do they sell it for. So this is what they're referring to. And we can see that in this case, it costed Amazon almost $140 billion just to make and distribute the products and services that they sold for $232 billion. That of course leaves us with the gross profit, and that comes in at $93 billion, which is what they brought in from the sales after paying for all of those manufacturing and distribution costs. And while that is obviously very high, you'll soon find out that it's very easy to lose a lot of this gross profit after you start deducting costs even further. Now, for some reason, NASDAQ.com doesn't list Amazon's research and development here, and they just lumped it into the next category down, but it should be around $30 billion based off of what I saw on a separate website called Yahoo Finance. In any case, the research and development category is just how much money they spent on innovating, and that can be done through brand new products or it can even be used to improve already existing products as well. And this is a very important category for me personally because I consider myself to be a little bit more of a growth investor. And if you want to keep growing at high rates like Amazon, obviously does all the time, you're going to need to be constantly innovating and improving your products. So I like to see a large amount of their sales go right back into R&D, and of course at over $30 billion for Amazon, it's clearly a high priority for them. Okay, next up here we have sales, general, and administrative expenses, and in comparison to the cost of revenue, this category is everything that is not involved in the manufacturing of the product or the distribution or performing the service. So think of sales, think of advertising, think of the employees needed to run the company, think of corporate, all of those other expenses that keep everything running smoothly. And here we can see that Amazon spent over $81 billion in this category, but keep in mind that this includes the $30 billion of R&D, so it's really closer to around $50 billion. And that brings us to non-recurring items. And as you might expect, that just means either a gain or a loss from something that is not expected to occur on a regular basis. So it might be some kind of write down of assets that maybe aren't worth as much as they used to be, or maybe it's some kind of a repair cost for a facility, or maybe it has to do with some lawsuit. It can basically be a number of things similar to this, and in this case, Amazon has nothing listed in this category. And then we have other operating items, and that's just anything else. It might be office expenses, it can be something like a random IT service, but it's usually expenses that are not heavily tied to the primary business of the company, like the production or the sale of their products and services. In any case, Amazon doesn't have anything listed here either, although it's probably just lumped into another category above. And that brings us to a very important category, and once we deduct all of the previous expenses from their sales, we get down to their operating income. And as you might guess, this is just the furthest category down that we've reached so far. That tells us, okay, once you deduct all of those essential expenses to produce the products, sell the products, and run the company efficiently, then you're left with the operating income or the overall profit that is generated so far from the operations of the business. And operating income is often used in place of net income because it tells you how well the company is being run based on items that they can probably control a little bit more. Whereas with net income, you have to factor in things like taxes that is in some ways maybe a little more out of your control perhaps. And in this case, we've now dropped from over $232 billion all the way down to around $12 billion. So you can see now just how expensive it can be to profitably run a gigantic company like Amazon. And that brings us to additional income or expense items. And I don't know much about this category because I think it's usually company specific and is probably anything else that they just feel should be in its own category. But we can see here that Amazon actually made a couple $100 million from this category last year. So that increases their total profits so far to $12,678 million, which is also their earnings before interest and taxes. And that brings us, of course, to interest expense, and that is how much interest Amazon has paid on loans, bonds, debt, or lines of credit. And in this case, Amazon paid out about $1.4 billion of interest last year. And that leaves us with the earnings before tax, which is just all of the profits up to this point before we start deducting taxes. And that of course leads us to the income tax category, and that's the taxes that the company either paid or expects to pay on their income, which is collected by the government. And in this case, Amazon has just a little under $1.2 billion of income tax for 2018. Of course, Amazon is often in the headlines of the media because of how little taxes they pay, especially relative to their sales, including reports that they pay $0 in federal taxes. And that's because of several reasons, including how much they invest back into the company, how long they went not being profitable, and several other factors that get them kind of tax breaks and lower their taxable amounts and things like that. In any case, the amount of taxes listed here is most likely for state and international taxes. Okay, next up here we have minority interest, and this one is a little tricky, so I'm just going to give you an example. Let's say that Amazon controls a majority stake in Tesla, so it would have to be above 50%, but for this example, let's just say that Amazon owns 90% of Tesla. And if that was the case, then they would have to report Tesla's revenue on their income statements as a consolidated or grouped together income statement. But because there is still 10% left over, that 10% would have to balance out as a negative here in this minority interest category, because it's basically revenue that Tesla is entitled to at 10%. And because Amazon only owns 90%, Amazon is not entitled to that last 10% of their business. But again, for this to happen, Amazon would have to be a majority owner with something still left over controlled by a minority investor or a minority company. And in this case, Amazon just has 0 listed here. Okay, next up is a little bit of a mouthful, but this is the equity earnings or loss of an unconsolidated subsidiary. And don't get confused by all the fancy terminology. What it basically means is that if Amazon is the parent company of some other company, like the previous example that we just used, but for some reason maybe their business is a little too different, or it's only a temporary control that Amazon has, then they will list that company separately on the income statements as a sort of unconsolidated or ungrouped together category. And then they would just list either the profit of that investment for the year or how much they lost in that investment. But in Amazon's case, they made $9 million in 2018 from this category. And that leads us to net income from continuing operations, which is the furthest we've deducted so far. And it's basically the bottom line or the net income, except that it would deduct any income from discontinued operations that have been stopped or shut down. I know that sounds a little tricky, but it's not really a big deal here because it's listed as the same as net income, which is just all of their profits minus all of the expenses, the interest, the taxes, and so on. And in Amazon's case, they brought in over $10 billion of net income. So that means that they made over $10 billion in total profit from their sales and after all of those deductions. Okay, now you can see here that there is still one more category left, and that is net income attributable to shareholders. And that would just take into account any minority interest, because in the example that I gave you before, if Amazon owns 90% of Tesla, then Amazon's shareholders wouldn't be entitled to that last 10% of Tesla. But in this case, there is no minority interest, so it's just the same as the net income. And I'll just quickly add one last thing, and that is that obviously $10 billion off of $232 billion doesn't seem like a lot in relation, but you have to keep in mind that Amazon is known for reinvesting in their company all the time. So that drives up expenses in a massive way, which in turn lowers their profits. And it's actually been the case for many years that Amazon wasn't profitable. And even when they were, their net income was still much lower than what it is today, as you can see on these previous years. And that's because they always focused on expanding and becoming bigger rather than just focusing on what they already do and being profitable. Instead, they like to push the boundaries and keep expanding so that they can get even bigger and even more dominant in the future. And at the same time, they also lower their taxable income and qualify for certain tax breaks, which is what we discussed earlier in the video. Okay, I think that just about does it for this video. I hope you guys learned something. I hope you enjoyed the video. If you have any questions or comments, leave them down below. And if you have any suggestions for future educational videos, make sure you let me know as well. And I think that's about it. Thank you so much for watching. Hit the like button if you enjoyed the video. I'll catch you guys in the next one. Thank you. Take care. Bye-bye.